All right, good morning, everyone. This is the Forex Trading Asia live daily currency call. Chinwei is not in today, so I'm trying out taking a chance at being the host for this call again. Um, Today is Thursday, the 6th of May, as we head into almost end of this week. We have Kim Hong here, we have Scott there, we have Daniel around to share with us more about what has happened in the market and what is likely to come up over the next couple of days. But a quick reminder again to everyone is that all the opinions, all the trade ideas, any trade opportunities that we share here during this call is going to be just the opinion of the speaker themselves. If you're going to take any trades, follow any trade ideas or take any trades based on what we shared, make sure you do your own analysis, make sure you do your own risk management. We cannot be entirely responsible for what you do with your trading account. So with that said, we've had some news through the start of the week, but it comes down to now the meaty portion of the week where we have the Bank of England news coming out later today. We have non-farm payrolls tomorrow. We've got a whole bunch of news and volatility probably expected to increase later or today and tomorrow compared to how it has been throughout the week, throughout the earlier part of the week. We have here Kim Hong with us. He is an analyst at LCMS Traders to share with you more about what's coming up into the market for the next couple of days. Kim Hong, take it away.
All right, thanks a lot, Jean. Okay, so as Jean has mentioned, the Bank of England will be announcing their monetary policy decision today. Okay, so they will be announcing it at 1900 hours GMT plus 8. Okay, so as widely expected, the Bank of England is going to be holding its interest rates unchanged at 0.1%, okay, while maintaining quantitative easing, okay. However, okay, sorry, I take that back. As of now, okay, the Bank of England may very well make a revision to its quantitative easing, okay, because due to the recent good economics data and there has been a very strong downtrend in the number of COVID cases, okay, that means COVID cases has been falling since January, and they have been doing very well in terms of the vaccination program. So because of that, they may actually be cutting back on the quantitative easing, okay, the bonds purchase program, all right? If not, they may at least actually highlight that they may do it in the next meeting, okay? So that is one key point. Another key point is that they will be releasing the monetary policy report, which is released on a quarterly basis, and they are actually expected to revise their economic projections upwards, all right? So in a scenario whereby the Bank of England decides to cut back on quantitative easing or actually give a hint that they are going to do so in the near future, and as well as revising its economic projections upwards, okay, meaning to say that they feel that the economic growth in United Kingdom will be higher in the next 2 quarters, okay, quarter 3 and quarter 4, then we may actually be seeing an appreciation in pound, okay, so the British pound may actually strengthen. As of right now, okay, the assets purchase facility votes, which is actually the so the Bank of England actually have like 9 members in there, so they will be voting to either to increase or to decrease or to hold assets purchase, which is bond purchase program, unchanged. Okay, so as of now, they are actually expected to remain unchanged. Okay, but who knows what will happen later on, right? So I think we should just pay attention to these 2 key points later on at 1900 GMT plus 8 and see how it goes. All right, and I will provide you guys with any more updates tomorrow morning during the next currency call. All right, thank you.
All right, thanks for that, Kim Hong. So it sounds like it might be business as usual with no change, but with a possible surprise about with QE being or stimulus being cut back. If not cutting back immediately, an indication that there might be a reduction in the QE program. This would actually look quite interesting for the pound dollar and or the pound related pairs. So I would actually be looking forward to that as well. I hope we're all trading that scenario tonight. With that said, it's not just about the Bank of England decision tonight. Everything we trade is going to be related to the US dollar. So we have Scott here, Forex Briefcase Australia, sharing with us his views on the US dollar and also, where is it possibly heading into the short, medium, and possibly longer term. Scott, take it away.
Thanks, Jin, and thanks for that ultra smooth segue as well. I appreciate that. So, look, guys, we do have a little bit to talk about the US dollar. I'll just share my charts thanks to Sam Trade here. So, just as we're actually presenting the currency call as well now, we are seeing it just again retest, the 91.30 or so. And what I'd like to say is that it's definitely worth watching. Now, last night we did have a couple pieces of data come out that just missed expectations. So there was the US ISM non-manufacturing PMIs. Now they did slightly miss, but I'd like to give a brief backstory as to what's going on with that. So there were discussions that production capacity constraints have been taking place, material shortages as well, also weather and challenges in logistics and human resources continue to affect deliveries, which has resulted in a reduction in inventories. So, there's more to the data than just the data. So it was a little bit less than expected, but, we're really running at near full capacity in the US. So I really have to sort of present a bullish case, especially into the lead up to NFP as well. So I'll just quickly show just some data to pay attention to as well. So I'll just go to the screen here now as well. So we've just got the LCMS Traders Club EchoFin platform here. So you can go back and you can see the data that was presented as well. Let's say you are looking to take a trade, but obviously really NFP is what the markets are waiting on as well. So my thought process is you're probably going to have to just leave it for now. It looks like it's really waiting for that catalyst. It's squeezing up against that level and then, getting in if, like we mentioned yesterday with the NFP preview, Daniel really talked about maybe $1 million. I was a little more reserved. Gim was a little more reserved. But if it really does get over $1 million with that NFP result, we could see, a breakout trade potentially. And it's a nice risk to reward there, shooting for maybe 92 as a potential take profit. So that's something to look for, guys. But no immediate trade entries are on quite yet with the US dollar. And that's it from me, Jin, as well with the US dollar.
Okay, great. Sorry. Are you continuing on?
No, look, I mean, so the main thing is just to sit and wait, guys, and to be patient. And I do have a new background as well. So you're probably thinking, what is this? So I am an investor with Forex Briefcase as well. So that's what the background is. It's, I'm 8,300 up in 8 months, 11.3% gain this year. So that explains the background as well. So I am an investor with Forex Briefcase as well.
All right, didn't mean to cut you off there. Okay, so good stuff. This is not planned, entirely not planned, but Kim Hong, Scott, Daniel, stay tuned. Before the end of this call, Scott, we were just chatting about that interaction between China and Australia, the news that you were just sharing with me earlier just then. I have actually, why I want to bring that up later in the call is I have actually just seen over the last hour, the Aussie dollar did drop a good 50 something pips, same with the New Zealand dollar as well. That big black candle on the 1 hour time frame has dropped quite significantly. So we'll have a chat about that. And also, I want to build upon the non-farm payroll discussion we had yesterday with the ADP number that came out last night. Obviously, it missed the expectation. Just going to bring it back to you guys again. Do you think it's your projections of a million or very good numbers is going to hold steady despite the ADP number from last night? All right, so think about that. Something to think about while I go through the currency in focus today. Today we are looking at all the yen pairs: the US yen, the pound yen, the euro yen, and also gold. So I'll jump straight into it. I'm not going to do my introduction because it feels weird to introduce myself. But I'm just going to go. You guys all know me already, so I'm just going to go straight into it. Looking at the news, we've been talking about news all morning already. Today we don't have that much news happening. On Thursday, we have some pound PMI numbers being released. But the main focus is back to the Bank of England, and Kim Hong has gone through in depth about what could happen from the Bank of England there. So the main takeaway is that we might see a good upside from the Bank of England if they do reduce the QE program, or if they do signal a possible or future reduction in the QE program. So that's something to look out for, possible big upside on the pound dollar or on the pound across the board. With the US dollar data, not a lot of data being released tonight, but the focus will be very quickly after that news for the pound news to shift towards Friday, where we're going to see the non-farm payroll numbers come out from the US. We'll talk about the revision of expectations again, whether non-farm payrolls is still going to come out at about 978, or is it going to be a little bit worse? Despite that, I still do feel that we will see some upside in the US dollar at this point. And as I highlighted yesterday, we might see some potentially very interesting trade opportunities on the US CAD, but I'll talk more about that tomorrow. So from this point, you can see that there's not a lot of yen news, or actually no yen news that is being released over the next couple of days. US dollar news, only the non-farm payrolls, some pound news tonight. So this actually could make trading the yen pairs a little bit easier from this point. Looking at the US yen here, the last time we spoke about it, it was at about 108.75. I said it was going to come up and test the 109.80 resistance region. It's done that exactly. Traders Club members did get a quick heads up, early heads up on that. I was saying that based on this red line, there was about 108.20 towards the 109.80 resistance level. That was a fantastic 150 pip move upwards, which did exactly that early this week. At this point right now, with the US yen, it has hit that 109.80 resistance and now set in a tight consolidation, relatively tight consolidation. How you should best approach this is, for now, we know that there's not a lot of US news. We know that there's, no yen news. Sit and wait, especially on the US yen. Wait for it. I do think that we might see it track higher and break above that 109.80 resistance level. As Scott was saying, we might see some US dollar strength come into play with that, and also with the possibly better or confident non-farm payroll numbers that might be coming out. Look for it to move up above 109.80 before you look to buy it up towards the 111.16 level, or maybe even the 110.80 level. So what you're looking for at this point will be maybe at about let it break 110. You could be looking at a 30 pip stop loss for a good 90 pip take profit level. You're looking at a 1:3 risk reward ratio towards the upside on the US yen. But bear in mind, you will have to wait for it to break the resistance. it's about another 60 pips move before you're looking for that upside potential. That said, looking at the euro yen, it's gone against, it's gone against how the US yen has been doing. The euro yen shot up quite significantly last week. We were sharing, expecting it head towards 132.97. Did half of that before it came back into the 131.71 support level. At this point, looking at how the euro dollar is doing, it's been tracking lower. We spoke about this, saying that it's possibly heading towards the 1.1920 support level. We anticipate that with the euro yen, it might actually continue lower. But because the euro yen is somewhat correlated with the US yen, anticipate that it could hit up, test the 131.71 level again before turning back down towards the 130.28. I don't think it'll go that far. I think it might be about there. So about 130.50. So let it track up. It possibly will track up a little bit before turning back down again. So look to sell. If it's going to track up, let it reject the 131.71 level, 30 pip stop loss, 90 pip take profit level. Again, a 1:3 risk reward ratio towards the downside when it rejects that resistance level. If it doesn't reject that resistance level, then you're only looking to sell below this point at below 131. Below 131, you're looking to sell. You're going to look at 30 pip stop loss for about 30 pip, 40 pip take profit level. Very tight, very close control, very active managed trade towards the downside at this point at a 1:1 risk reward ratio. All right. That is the euro yen on the H4 time frame. Now, last one, the pound yen on the H4 again. It's so straightforward. It looks like it's going to be so straightforward. Leading up with the Bank of England news coming out as well. I last week said that we were looking for it to break 152.26 towards the upside. It didn't break. So that's a key point, that you have your levels there so that to make sure whether it breaks, then you get into a trade. In this case, it didn't break and rejected back downwards. At this point, if we do see that news from the Bank of England, that reduction in QE, that indication for future reduction in QE, then we could see the pound yen shoot significantly upwards towards 153.50. It has to break that 152.26. Then you're looking at a 20, 30 pip stop loss for a very good 100 pip take profit. Again, above 1:3 risk reward ratio towards the upside. But if we don't see that surprise coming from the Bank of England, if we just see them coming up with the same standard statements, then we might actually see the pound yen bounce around this 152.26 level before tracing back down again towards 150.82. Same thing that is done last week, coming back down towards that support level. If we don't see any surprises, we don't see any external stimulus can't say stimulus too easily, any external factors to push prices, then we will see it trade within that 152 and 150 range again. So look for that surprise. If it doesn't happen, then we're looking for it to come back into the 150.82 range. And lucky last, looking at gold. Gold, it's a long-term play. Gold, when I look at it, it's on a daily time frame. So it's very long-term play. Last time we spoke about it, I said it was going to come down, test that 1773 support before turning back up. I still do think we might see that come into play. So that analysis still holds from last week. So with all that information shared about the US yen, the euro yen, the pound yen, we do have a lot of trade ideas and opportunities coming up, especially with all that news lined up today and tomorrow. With that, I'll get Daniel, and before we jump into the two questions that I gave out with you guys, I'll get Daniel to come share with you about the Traders Club. You know, we were supposed to have a live trading session last night, but didn't happen. Markets were super quiet. So, you know, Daniel, share with us about the Traders Club.
Okay, yes. Very happy to share about the Traders Club here. So let me talk about a little bit about Traders Club. You know, since 2014, we have helped hundreds of traders, exactly like everybody here, from going from completely confused and to an unprofitable to actually understanding the market, covering losses, and finally be profitable. So here in the Traders Club, it is we have here, I'll show you here, it is a dedicated club platform. It's really for anybody who's serious in being profitable in trading. Now, while here we host a community of traders sharing strategies, ideas, monitoring the market together. It's really almost being part of a professional trading team here. So you can see we're here in the trading floor. We have discussions between all the interaction coaches, members, interacting what good ideas we have. We have Scotty just putting up the what he thinks about the US data coming in, and then they were discussing lots and other trades. And this is a member here talking about his idea, what to do. Now, not only that, here we have a market watch here where we discuss about putting anything we look at the market, what has happened. In fact, every morning we do put in things like coverage watch list where we tell you what is a snapshot of what's happening in the market. In the morning, we look at what currency pairs there is, what possible actions you can take, a buy or sell trade, possible entry levels, and potential profit targets. And also, not only that, we here in Forex Trading Asia has a daily currency analysis where we hit, looking at various currencies we do. And you can, if you look at here, we actually put up what possible, what's happened yesterday and what possible targets, and look at what any possible trading opportunities that we do. Now, here, not only that, Scott has also, very happy that Scott also showed just now that we have a lot of features here in the LCMS Traders Club platform. We have the economic news data coming in, which he just showed you, right? Economic data where you can plan your trades, know what surprises could be coming up, and especially the data flash he showed you here. And what I like about the data flash here is you really get the news earlier than anybody else. Okay, no, not only that, everything here is moderated by the coaches in LCMS Traders. And also we have live sessions twice a week. Coaching on Monday, and yesterday we were supposed to have live trading sessions. These sessions is where we can guide you through, the current market conditions and where we can literally make profits together. Now, if you have come from the Telegram channel, you've been receiving trade signals late, but here in the platform, you get all the signals all on time and learn the strategies, reasons together. You can see from here, okay, from signals, you get all the signals here, alert and come here, and also the signal analysis as well, why we take a trade, where we possibly take the target. Now, this platform is available on the web, desktop, mobile application, which means you can access all the contents anywhere, anytime, and receive mobile notification on our signals. So for those who are interested to join, there's a club here. It is at the tradersclub.lcms.com.sg. It is your chance to join now at $49 a month. Now, this is without a doubt the very least you can do to make sure that you achieve your best in trading. This price can change anytime, so make sure you get on board right now. Jin, back to you.
All right, thanks for that. So as I was saying, looking at the, I'll show you here, looking at the ADP non-farm employment change from last night. So ADP non-farm employment change is a private number. It's a private, privately generated number from a private firm, not a government number, but previous number was 565, expected 800, got released at 742. Some institutions and people have used the ADP non-farm employment change as a forward indicator of Friday's non-farm payroll number. With the projections that you guys had, massive projections that you guys had, yesterday. I'll go through with you again. Do you change your view? Are you still holding the expectation? Do you think, or this is your chance to think about giving a revision? Kim Hong, you want to start?
Yep, sure. Okay, so personally, I stick with my views presented yesterday, because the thing is that, okay, if we actually look at the numbers, you know what, let me just share my screen. Give me a second. Share screen. Calendar. All right, can you guys see my screen?
Give it a moment.
Okay, my laptop is lagging right now. This is not good.
All right, so for everyone who's attending right now, Kim Hong has like a million tabs open on his laptop at any point in time.
Yep.
Why it's lagging right now?
Okay.
Okay, so Kim Hong, while you try and get that sorted, I'll jump over to Scott to your chance on a revision or a standing by your number.
Okay, so I'm going to stand by. I don't think it's going to be over 1 million. I think around 10K over or so maybe 990, something around that. I think that in regards to the numbers we saw, typically it can be used as forward projections to the NFP number, but I think that there are some factors at play that are unique to what's happened with the COVID situation in regards, and especially weather issues as well. So I just think that it is going to beat expectations, but it's not going to be a super bullish 1 million plus. It's just going to be sort of better, but not ridiculously better, are my thoughts.
Okay, so Scott's holding on to his view, but we're still expecting a good, strong US dollar to come around on Friday especially. Daniel, what do you think?
Okay, I'm going to hold my view. I'm going to be very optimistic view here because ADP non-farm employment change, if you look at it, yes, it didn't beat the expected forecast of 872K. It's only at 742K, but prospectively, it's still much higher than the previous number of 565K. So no matter how, there's definitely more jobs being created. Now, I'm looking at the non-farm payroll. I'm thinking that the public sector, with all the stimulus package and coming in, all the plans coming in, they're going to hire more people in. So together, I think it's going to beat that 1 million number here. So it's very bullish coming in for non-farm employment change. That's my view.
All right, awesome. So again, if you do see that million number, then you heard it first here during the currency call. Kim Hong, you want to come back in and share your screen, or is it still going to lag again?
Yep, I think it's back now. Let me try sharing my screen again. Let's pray that it's working. Can you guys see my screen? Awesome. Okay. So as I was saying, I will hold my stance. Okay. Why is that the case? If you guys look at the ADP non-farm data that was released, okay, previously it was 565,000 and they forecast 872,000. It's actually like a massive jump in number, okay? It's actually a massive expectation from the previous month. And it turns out it's 742K, which is in between the previous release and the forecasted data, okay? Now, looking at the non-farm employment change data that we released this Friday, okay, we see that there's actually just a little bit of upwards increase in the forecast, okay? So it's 916,000 from the previous month, okay? And we are forecasting a 990,000. So, the change is not that much. So to be able to hit 900,000 jobs this for last month, okay, at the moment, is actually not, it's actually very doable, I would say. Okay, it's not like we're expecting a jump from the previous 916,000 to say like a 1.5 million jobs, that sort of figure, okay? So I'm still going to stick with my view. And yes, I believe we will see a very nice jobs report tomorrow.
Brilliant, thanks for that. that detail and thought process actually gives everyone a bit of hope. I hope it gives everyone a bit of an insight into how these numbers are, how we try to predict these numbers, how we try to take advantage of both the previous and the forecasted number to get a bit of a heads up, to get a bit of expectation into what could be released. So thanks for sharing that, Yim Hong. Just one last one, Scott, in a couple of lines, what's happening to the Aussie dollar at this point? I'll share the screen, you can do the commentary.
All right. Definitely a pretty significant news out of China as well. Language was quite strong in regards to breaking discussions and ties indefinitely as well. So, and I saw it and noticed that we've had a pullback in the Aussie equity markets as well. So it seemed to have bottomed a little bit. We'll just have to wait and see if there are any statements that come out from Australia. And I don't believe they have yet. It was obviously unexpected. This is a good example of, unexpected news really affecting markets. And it really just broke through that support level. So let's see what happens. And the thing is, though, really right now, it's typically quiet markets. So I'd like to see what this candle does and then how we respond to later into the session. We do actually have the US dollar really teetering and breaking through 91.32. So could be an interesting situation when we see a retest of that support level or the resistance level upcoming. But it was a bit of a catalyst here to maybe send the Aussie dollar a little bit lower. So I'm sort of bearish now on this, and we've got, in regards to that risk to reward, it's looking pretty good, especially if we can see that candle move a little high. That just gives us better value, where you'll see people come in and want to dip buy this. And to be honest, with this sentiment now out of China, it's very unexpected and a pretty big move as well in the session. So I think, honestly, we want to see what this candle does, but could be some nice selling opportunities into this with more news coming out as well from Australia to see how they respond to it all.
All right, thanks for that, Scott. So Traders Club members, if there is further developments of this trade or of this news, we will be sharing it on the platform. In the meantime, everyone trade well, trade safe. There is some news, big news coming out today. Thank you for attending the call today. Hope to see you tomorrow as we go through further lead up to the non-farm payrolls and also the currency in focus, the US CAD. Thank you all. Take care. See you later. Bye-bye.